No, before that, how do you see the euro dollar, euro Aussie, and euro and pound yen for today? Well, euro dollar, I think it's I think there's pressure to the downside. The ECB did deliver quite a lot, and this move backfired, but I think the pressure remains here. And if we have even a slightly hawkish Fed, I think we could fall under 110.70 back to the lower range, perhaps not too far, but I'm a bit bearish on the euro. Okay, of course, if we have a dovish Fed, we could have a resumption of the rise towards 112.15, but my tendency is a bit to the downside. Pound yen, well, if the Fed is a bit hawkish, I think that could hurt the pound, which is very vulnerable, and strengthen the safe haven yen. That means this pair could fall. So once again, assuming there are too many assumptions here, because we have a speech from Kuroda, UK budget, UK employment figures, so much in the mix today, explosive mix, toxic mix, if you wish, for pound yen. But the tendency for me is a bit to the downside. Again, so many things to consider. First one coming just in less than an hour, the UK jobs report, then the UK budget, then Kuroda, and the Fed could also have an impact, because a better mood is good for pound yen, a worse mood, I mean, a hawkish Fed is bad for pound yen. So really, I would say so many factors having an impact here. And Euro Aussie, I have that somewhere here. But in general, my tendency is sort of more bullish on the Aussie, more bearish on the euro. So my tendency would be down. But again, it depends if the Fed is hawkish. It's, I think, worse for the euro, a bit better for the Aussie. And if Australian jobs report, and a lot depends on the Australian jobs report. If it's good, then we could have stronger Aussie, bad, worse, weaker Aussie. Okay, very, very, very straightforward in that sense. But remember, euro Aussie and pound yen, even though we don't have the dollar there, the dollar has an impact, especially for the yen, which could enjoy safe haven flows, and the other way around as well. Anyway, 151.50 is significant for euro Aussie, followed by 152.50. On the downside, 147, 145.80, yeah, and 144.50. And levels for pound yen, well, I already talked about that beforehand. 163.80, 162.20, 160, and 158.50 are all the levels here on pound yen. Okay, so let's get to the wrap up for today. This is the wrap up for the live market open for Wednesday, March 16th. We had lots of developments in markets, and today's perhaps one of the busiest days in quite some time. Let's begin with the mood. Oil did manage to stabilize. That's a good thing. US primaries showed strength and victories for Trump and Clinton. This seems to be the race. It's not over, but that's what's going on. So far, no impact. Lots of tension about the Fed. We'll talk about that very soon. Yesterday in markets, the big event was that retail sales were quite mixed. Small beat on the headline, but very disappointing revisions. Left a sour taste in the mouths of everybody and a more damp market mood. Other figures were sort of okay. PPI was okay. Empire State Manufacturing Index beat expectations, so perhaps some kind of a bounce in the manufacturing sector. The kiwi was hit by milk prices. And, well, the pound was hit by a referendum poll showing a growing support for Brexit. Big hit for the pound. And the yen was hit by a dovish comment by Kuroda saying, once again, even though they didn't change policy and even reduce the chance, according to their statement, of negative rates, he did reopen this debate and weakened the yen. Very, very busy day today. One of the busiest currencies is the pound. Jobs report today. First and foremost, watch out for wages, including bonuses, and after that, excluding. Also watch out for, well, the jobless claims in the UK jobs report and the unemployment rate. Expectations are for an okay report. Let's see how things pan out. At 12 GMT, very, very busy time. US inflation figures. First of all, core inflation year over year expected to stay at 2.2%. Also watch out for headline inflation, also month over month. Housing data tends to contradict, tends to go both ways. Housing starts and building permits. But anyway, the Fed is more important, but perhaps more important for currencies at the same time is the release of the annual budget in the United Kingdom. George Osborne faces Parliament. Okay. We're expecting an austerity budget over there because of a cocktail of threats, as Osborne said in the past. The pound is already suffering because of that, because of the Brexit. Very, very, very busy day for the pound. Tuck will show the chart soon. We have industrial output also in the United States, Canadian manufacturing sales. For those trading the CAD. More important for CAD is oil inventories at 2:30. Watch out for gasoline and for a report on US production, which has begun falling recently, but remains stubborn. Main dish for today, Fed decision. We begin the broadcast at 5:45 GMT. At 6 GMT, we have the statement, no changes expected, and the dot plot, it's expected to show less hikes this year. The previous dot plot for December showed 4 rate hikes. Nobody believes that. I'm expecting now 2 hikes on the charts, probably an open door for a hike in June, which is sort of an inflection point. We're not sure about that or not, and perhaps one in December after the elections in November. Yellen's press conference at 6:30. The market mood towards the Fed has changed quite a few times. My small tendency is towards a relatively optimistic and hawkish one, but an intention not to rock the boat. But really, everything is open. Wait for the news before entering a trade. The economy is gradually improving in comparison to Q4, but again, with this retail sales report yesterday, it's not so good. Watch out for updated forecasts on inflation, growth, and employment. The press conference, in case that we really get something more hawkish, then vulnerable currencies are the euro, the kiwi, and the pound, which are now weaker. The ones that are sort of the stronger ones are the Australian dollar, the yen, and the Canadian dollar. But in general, if we have a dovish Fed, and we can never rule that out, and again, chances are very close to 50-50 between the hawkish and dovish Fed, then of course all boats could rise. I can't point out a specific currency. Perhaps the Australian dollar is stronger, but we'll have to wait also for events coming after the Fed. The Fed, of course, will continue echoing the immediate release afterwards at the Tokyo Open, okay, and then in the European morning. So it's an important Fed decision, and it'll have an impact on markets for quite some time, okay? For those trading the Aussie, the Kiwi, and the yen, we have a few other things to focus on as well, okay? At 9:45, New Zealand GDP expected to be lower than beforehand. Trade balance in Japan. Australian jobs report, let's see if the positive momentum in the Aussie continues. We're expecting a small gain in jobs. A speech by Kuroda at 6:30 GMT. He had a negative impact on the yen. Tonight, let's see if he does that again. And just mentioned that tomorrow we'll have a Swiss rate decision. Okay. The wrap-up, we also talk about the various charts. Let's do that quickly. Euro-dollar clinging to support, separator of ranges at 110.70, very strong line for now. High resistance 112.15, 113.75. Support 109.60, 108.20, 107.10. Pound dollar crashing, perhaps a bit too much, 141.10 at the moment. Support 140.50, 140, and 138.40. Resistance 141.75, 142.80, and 144.40. Dollar yen 114, 114.50. 114.50 and 116. On the downside, 112.20, double bottom at 111. Dollar CAD, 134.60 is the line to watch, followed by, well, 136.50. Support 133 and 131.75. Aussie dollar 74.40, very strong line of support. On the top side, 75 and 76. On the downside, 73, 75, and 72.80. Kiwi dollar pressured, 65.50 is support, resistance 66.20. Sorry. Okay, before we head off into the sunset, or the sunrise, why is the hawkish Fed bad for pound yen? Well, the pound is a risk currency. It needs a positive market mood to rise. That means if the Fed continues supporting the US economy and the global economy with more stimulus, it's good news for the pound, and it's less demand for the safe haven yen. The yen rises in times of trouble, and if the Fed is more dovish, there's no need for a safe haven. But on the other way around, to answer your question, a hawkish Fed means a rate hike, more rate hikes coming. Bad news for the global economy. No appetite for risk, more appetite for safe havens. Okay, stronger yen and less and weaker British pound. Okay, I hope that's a good explanation. Remember, we still have this risk on, risk off equilibrium, and even if what the Fed says or what happens in markets unrelated to specific currencies has an impact on when we were talking about a safe haven currency versus risk currency. Okay, so that's it for today. A very long show in comparison to previous shows because we had a lot to talk about. I wish everybody a safe and successful trading day today. Please do join our broadcast today. Any feedback about the show is always welcome. I had an interview yesterday with Dale. We'll put that up as well. Anyway, thank you very much, everybody, for coming. Good luck today. Join the broadcast today, and we'll be here, of course, tomorrow. So that's it for today. Thank you, and bye-bye.